Yes, everyone's a hero, a long hero in a bull market. It's the bear market that determines those that survive and those that don't. We've been in a highly expansionary phase for cryptos for an extended period. And now we faced the first of a number of bears. We suggested to you on Bitcoin that we were going to be trading through the $7,500 mark. We load out at 7252, currently trading 753, currently trading 7537 right now. The downside target of the HVF that we identified was made. It took a little longer. It had a nice little rising wedge, gave you an opportunity to get in. It was clear it was failing when this HVF, a little micro funnel on a real small set time frame setup, popped and then fizzled. Remember, we don't want to trade the counter trend. We want to trade the primary trend. This was a rising wedge and it did what we thought it might do. We won't always be accurate. We were looking to be on balance of probabilities accurate. That doesn't mean 100% accurate. It doesn't even mean 75% accurate. What it means is on balance of probabilities for any given situation that you're more likely than not. And so the failure here was a warning. It was a clear warning as you fell out the wedge. And then when you ran the stop low, this is what key levels of significance give you. This is what you have if you're an HVF trader. The difference is everyone who's a hodler right now, everyone who's been trading ICOs, nearly all of them are underwater. You take the last year's worth of ICOs, you have more than 55%, 60% underwater. Anything in the last 3 months, almost exclusively, not 100%, but underwater, and deeply so by some measure. So the ICO traders in a bear market are killed. The hodlers in the bear market are killed. They saw almost $20,000 in Bitcoin, and then they saw 6,000. Many of them bailing out. When do they bail out? When they can't take the pain anymore. It becomes a gain of pain, and you can't bear it anymore, and you just want at least to come away with some change in your wallet, given the vast largesse you saw at one point. This is the absence of methodology. This is where emotion exists. In the easy money ICOs, I am being offered big inducements to punt ICOs on an ongoing basis, and just about every single one of them, we haven't done a single ICO promo for anyone because they haven't made the case, and in most instances I suspect it is an exit strategy for people that are not necessarily as passionate as how you should believe. I don't think you will get to where you wish to go with your trading chasing the latest, greatest, newest, freshest idea. Yes, some ICO in the future or some new listing which may not go ICO will come that will have something really powerful behind it, bring some new ideas, and will go the whole distance. But I've seen the people lose and suffer in penny shares. Everyone is thinking they're going to buy the 1 cent share that will go to £10, £20, £100, £1,000. It just largely doesn't happen. They end up sitting with a portfolio of nothing and rubbish that eventually they tire of and they clear out. And it's the same with the ICO strategy in cryptos. It's the same with hodling. My God, what a terrible time since December to hodl, and it's only really 3 months into the new year. Who knows how much more pain and suffrage you can take. Investing, and even more specifically active investing with occasional small amounts of leverage, is not a game for pain. It is not a game for taking the pain. How big a man are you? That is an ego contest that ends badly. Having a methodology and being dispassionate. So that target was made on Bitcoin. By the way, we aren't always accurate. This isn't an attempt to say so. We're regularly inaccurate. We're regularly wrong, as people like to say. I prefer the phrase of accuracy and inaccuracy. There's no ego to be implied here. We are on a journey of learning. We were late to properly take on board the risk of this being the bear market it was, but it's better to switch than not to switch at all, and that has allowed us to regain gains with continuation patterns here, micro ones, then into this larger one. They're giving you the target of 7.5. Hey, we were up still at 9s at that point, mid 9s, and at the top end here 9.5. Then you've had rising wedges. You could have shorted again at 8.3 and gone all the way down, and then we're trading at 7.53. That's $1,000 on Bitcoin, and this wasn't the one we chose to short, because it was not the worst. In other words, Bitcoin was the benchmark to show us that crypto market cap was dropping. This is what gave me the confidence when we were just under 400,000 here to say we will trade back again soon in the 200s. The fact that Bitcoin, one of the most dominant aspects of the coin market, is going to have a high probability of going lower. This said, it may now be a point where a bit of respite. Now that everybody has died, everybody hates crypto, it's been one too many smashdowns, is the point at which you actually may get some light relief. What could happen next? Well, let me show you this observation that I have for you on Bitcoin. And that is, this is a large falling wedge. And boy, were we up top here when we said danger, danger. It's gone a bit high, it's a short. We never for a minute thought it would go all the way and run that low. We still thought continuation upside. Then we got that huge capitulation. And that ran too low. So we went too high, we ran too low. We started to get uncertain. As it started to capitulate, take out that low, it was clear it was going to run this low. No longer upside continuation, a bear. Everyone back, oh, it's all hunky-dory on this rally. No, it was a pump, a pushback, and a small squirt, and then a pushback. It set up structure for the downside that led to the 7.5 target being run. You are now in the point where you're spilling out the base of a falling wedge on what we call a descending grind line. You can learn about that in HVF Method. Go to themarketsniper.com, click Getting Started, and fill in a short form. We need to know that you understand there are risks associated to what is a highly volatile market, and that you take full responsibility for making your own trade outcomes, and that you have the means. Not only is it expensive, that you have the means that you won't put yourself in the poorhouse. We want to add value. We don't want scared money. We rather you don't come. If you're still getting started, take your time, pick up the freebies, click Get Started, do the questionnaire if you're interested further. Anyway, what was the key element? We also assessed Ethereum against Bitcoin, and Ethereum is the big weakling against Bitcoin. We didn't like its structure. We'd seen this upside. We saw the blow off over performance of the last upside HVF. We then got inverted structure against Bitcoin, indicating that Ethereum was relatively weak. We put it on our relatively weak marker. And we said we don't like it, it's going to sell off. We've repeated this message on a number of occasions. It broke, return moves, spilled. This target was made to the downside. It ran the upside funnel, very weak right shoulder. You could argue that could have even been that inverted, could have been the right shoulder, but higher up. And then a weak bounce on the funnel there. That could be a right shoulder. There is still a head and shoulders downside target using the HVF method that utilizes the funnel of the left shoulder, and you will learn all about how we implement that on a program and a lot more. Believe me, guys picked up a bit by following the YouTube, are shocked often by how much more they get by having a community, a theory weekend, live trading days, the self-study program, and all the other components that are included. Anyway, you still have a downside target of this against Bitcoin at 0.05. Note, against Bitcoin, that doesn't necessarily mean against dollar. So if Bitcoin gets a pump and is the first to perform on the upside, you want to maybe rotate our shorts from the Ethereum USD to the Ethereum Bitcoin if Bitcoin is going to show a little bit of strength. But does that mean the trend is over? The bear trend is over? No, it doesn't. What I suspect is you're going to get some relief counter rally, and whether that counter rally turns into fresh trend or not to the upside will be the key point. Relief counter rally on the falling wedge draw, potentially. Doesn't have to be. Still a probability decision. Still can be wrong. We can dip a second time and really have a final spill that pushes it deeper out the low. All of these things can happen first, but I still think there's a probability chance we're going to have a counter rally pop out of this falling wedge structure, aka over here. So that HVF target is now made. There's a reason for a bit of relief rally, and this could be the part where it starts to occur. However, it will be led by BTC, possibly even BCH. Keep an eye out. because we have had relative reasonable strength by BCH against BTC. It's flat, it's held, as opposed to something like Ethereum. That said, going to Ethereum on the US dollar, it has rewarded us. So while we've been out on the BTC side in fiat, we have built BTC balance. Even though your dollar balance is staying the same, we've built BTC balance, which if it rallies out of the falling wedge will then also give you fiat. And at the same time with the short against Ethereum, you could have been up top here. I played this badly, but better badly and late than not at all, than the hodlers. We only picked up our short here on this microfractal that formed after the bear flag rally on the funnel on the downside. Look at all these key levels of significance, giving the game away. Once back into the funnel resistance, again back into the funnel resistance, much weaker now, flat, and spill to our cluster key level of significance. We told all our premium guys this, and after they were all clear on it and it was on, I think I may have mentioned it in a free view video. Then what do you get? The rising wedge, second chance to load up on these high points. Look at that spill. That is great. And there's a natural geometry. Between these halfway marks here and here as well. Look at that line from your spill, from your inverted, and down to here from when you spilled there. Natural geometry. And we've still got an HVF target a little lower, so this can come and have a final dip as part of its basing out to make this target. But I would suspect on balance of probabilities that will occur, given where we are and from whence it has come. So what was a big ballsy call had you made it at 860, 870 for Ethereum in short succession to trade 430, aka a halving of the second biggest market cap of the second biggest coin by some way. You're now only a small distance away from that actually materializing, and that possibly suggests that the BTC is not about to pump just yet. For Ethereum still to sell off a bit more, it's probably that BTC will be flat, probably not pumping on its way. What else happened to the others that were also in bear structure? Well, we were long Monero at one point. We were late to get out of it when the postponement came out. We weren't the first onto the news. We got caught out of it, but then it set up the same similar structure, just like Neo, just like all the others that we showed. And we said crypto contraction. This is a wind up for further downside. There was your H3. Once again, HVF method giving you the more information. You made your target, you got a wind up inverted HVF. Look at that. I'm just passing freehand past this right now. I've been out of Monero and I've been entirely in Ethereum. Look at that for your target to the downside. You would have got out on the low of the wick again there. So targets being made on the inverted, and now having made them, you're getting a little bit of a rally. But the rally does not mean back to bull. This is not a binary situation where you go from bear to bull. It is not like that. You get counter trend. You get counter trend rally for a short while, and then you revert back to the big dominant trend. Often you would never look at that small move up and say, right, bull market now. Many people do. They buy because it's cheap and you've just made exhaustive lows. That's not reason enough. You want all the green lights across all the time frames. This is what we do. 360-degree analysis across multiple coins and across all your big time frames. This is the key aspect about the difference between ICO buyers and hodlers, and methodology, where you take and you reduce the emotional element and you introduce a real thinking behind it. And it involves more work in your charting and less of the trading, but less is more. And if you do the free webinar on the 29th of March, you will see the 7 mistakes traders make and the 3 great gifts. And one of those 3 great gifts, I tell you now, for free and for nothing, is reduce your trades by 3. And what that allows you to do is just put far much more effort into planning your very best trades and implementing them and doing all the required smart stuff to ensure that you are selecting your best trades, and far less portfolio theory, which is actually scattergun, shotgun approach, hoping that one of the rounds land. It's far better to have all your eggs in your best baskets and look after it like hell and be damn sure than to put everything you own in multitude of baskets, one egg each. You're going to lose a bunch. Anyway, that is the difference between portfolio theory for someone who is investing and active investing and trading, where occasionally there can even be small amounts of leverage used. That is the big difference. So here you go. So you get Monero, make a target. It'll wind up. It could wind up just like this and reset up. Keep on keeping on. So the bias is the trend is bear, and we stay with it until provided otherwise. Although, as I've already mentioned, BTC may churn a bit, may have another little sell-off, but if we start to get the final breakout of the falling wedge structure here, then you will get some relief on the crypto market cap. You will get some relief on the crypto market cap, but we've dropped literally from 400 billion into those 200, as we'd suggested in a variety of YouTubes before. Would you have liked to have been one of the guys that made tens of thousands of dollars, had protected your entire portfolio? And we did this badly and we did this late. In my personal case, and in certainly for many of the guys following, we're far from perfect execution. Let me be absolutely clear, but we will be better and we'll be ready faster, sooner every time. That's the game, and you always get another chance, and you have to remember these moments, and you get given experiences to remember. And if you had picked up $60,000 over this period and 100% protected your portfolio from downside in fiat terms, and now could buy far more Bitcoin if we decided, which we are not saying yet, if we decided now was the time to get back into Bitcoin, would you be happier than the 99% of people that I suspect that are watching this and are dire mood about their crypto? Their crypto is bad news for them. It's been down, their accounts are down, and all of them are down. It didn't have to be that way, and methodology is the difference. I'm making a big stand here on this, and as I say, it's not to overplay a hand. We were accurate in this instance, and we aren't always, but it is the fact that you have what I'd call, think of it as a moral compass. What do I do? Refer to your moral compass. You know, when you're thinking about how the best to look after your kids and people and situations, what does a man of integrity do? You have a moral compass to refer to. When it comes to your trading, what do you do? What is the template you use to answer that question? And in the absence of methodology, you react. And, you know, I can't make this point strong enough, and I'm getting a bit messianic, but it's at key moments like the bear markets that show who actually can do well. When something is all going up and it's all love and light and it's 10x and buy every ICO and the pump is organized to suck everybody in and all of that, and they all go up 3x, 4x on the day, in a day, and you're a legend, I'm afraid you're not. I'm afraid you're not. I'm afraid you're not. The set of circumstances, the fact that you are net long in a net long environment happens to have aligned for you. And every now and then the clock does pass 9 o'clock if you stand there calling it 9 o'clock, twice in a day. But the point is, many of the times it's out of sync and out of alignment, and the adjustment is required from you. But people keep doing the same activities they did before because they want to be loyal and true and a believer. And actually what you need to do is assess, what is the market offering? If it's offering lemons, don't be trying to sell sweet stuff and strawberries, because the harvest is bitter. And that's the thing. You make lemonade. Anyway, so Ethereum is largely spilled significantly. This was a $30,000 gain for me. This was another $30,000 gain for me. And my Bitcoin valuation on everything else that was parked up in Tether has won. And I've gone into more detail on this with platforms with my premium guys. I don't intend to do that on a free view channel. And we will continue to do that. And we will continue to get better and make sure more and more of the premium guys are continuing to get the additional value add on their investment so that they can best protect themselves in these environments. And I will be doing a webinar review in great detail for them on this and what I believe will be coming next and how we will play it. And with that macro template, we will be right and wrong, inaccurate and accurate, but we will have a compass. And if you're to be in the jungle asking where to go next, it's so much better to have a compass than just to be gut instinct, hodling and hoping, or buying every ICO. Okay, thanks for listening. Bit messianic of me. Must be getting over my flu, but it's a key point that I really wanted to illustrate, and I'm hoping it's coming through. And take it for the message intended behind it. Attain a methodology. If you hate my methodology, fine, get another one, but have one. You don't have to be. You don't have to say mine's good. Just get one and have one. Believe you me, it makes a difference. And at times like these, that's when you most appreciate it and you can most make other people understand. And with that, I thank you for your following and all of that, and enjoy your new week ahead. And that webinar, by the way, if it is right, and it is not right for most people, let me just say it's not right for most people. These are volatile markets. That means it gets emotional. You need to have a certain amount of money that you can afford to lose or see double and halve. And you need to be prepared to employ money management principles so that you actually don't halve at any point. And that takes discipline, and it's a mature man with some means for which it's, and also in a good stage of life. Don't do it if you're just divorcing and having all sorts of dramas in your world. So it requires emotional balance. Go to themarketsniper.com. Getting started button. 29th of March is the next webinar, and I'll see you then if it suits. Otherwise, enjoy the free view and play it safe out there. Remember, it's far easier to trade bear setups in bear markets and make your trading feel easier, rather than continuing to try be a long in a market that no longer is a macro long. And at the same time, this market can change. You need a methodology to determine at what point that has occurred, so that you are applying the strategy, the harvest, according to that which you have sown. Okay, bye-bye for now.